From the morning reading, the SPX rallies, sells off, closes slightly higher. Bull flags bounce. More flags still flying. 6 of 9 sectors moved higher on Thursday. XLB, XLY, and XLE were the strongest sectors, while XLI was the weakest sector. Oil futures slipped 16 cents to close at 38.02. Breadth weakened as decliners led advancers 1.34 to 1 on the New York Stock Exchange and 1.84 to 1 on the NASDAQ. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 7:03 a.m. Central Time, and I am recording this in preparation for the market day of March the 11th, 2016. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's go ahead and dive into the report. And a bit of activity last night. We were pretty strongly up on all 4 of the U.S. Broad market indices. At the time of this cut, the S&P futures were up about 19 points, or just under 1%. Russell futures were up over 1%, as was the NASDAQ futures. Dow futures were up just a little under 1%. Crude oil was up nearly 2%. The euro is essentially down about 1%, and bonds are at scratch, and gold is down a little over 0.5%. In overseas action, China up about 0.2%, Hong Kong up about 1%, Japan up about 0.5%, Germany up very big, up 2.79%, United Kingdom up 1.4%. In terms of macroeconomic reports for today on the United States, there is import prices before the market opens, and that's about it. So pretty quiet on that front. In terms of current volatility conditions, what you're dealing with is the short-term VIX at about a 17.66, so relatively benign, not a lot of action yesterday. On an intraday basis, I guess you could say and make an argument that we had a pretty good amount of action, but when it was all said and done, close to close, not much. You'll see on the charts. Skew, though, is up and is up into the warning area at a 130. So about a 10% probability of a 2 standard deviation move in the next 30 days. IV percentile for the S&P is at a 24, so very low. Russell 29, NASDAQ 27, the Dow at a 21. In terms of standard deviation moves yesterday, based on a closed close, you had nothing. No market closed outside of a standard deviation move. So, in fact, if you look at the last 2 weeks on the S&P, we're getting pretty quiet. While we've had a 2 standard deviation move and then a 1 standard deviation move to the downside, that's it. And normally we would have 4 different events in a 2-week period. If you also look over here on the NASDAQ and the Dow, pretty quiet. Now, of course, the exception has been the Russell, which has just been on a historic run. And the prior 3 weeks, that, though, has been quiet the last couple days. Let's go ahead and go to the charts. And we're using the futures this morning because of the overnight activities, pretty extreme. You notice here yesterday, look at that, perfect doji on the futures chart. So open and close right on top of each other. Really accomplished nothing while we probed and, ticked just a little bit above the recent range. And you could have said, oh, bull flag will get triggered. And then as soon as you got triggered, you got wiped out. As you went all the way and probed the lower side. So if we're in a kind of a sideways pattern in recent days, yesterday kind of embodied all of it to end up deciding nothing. And that's basically what a doji is indecision. And then today, so far, of course, we've basically encapsulated between the open and the current price just about all of that action and recent trading days. You could pretty much capture 1, 2, 3, 4, 5. Basically, about the last 6 days are largely captured by what the overnight has already done. There are a little bit of extreme action on both ends of yesterday, of course, but it's been all for naught so far. We have not actually broken either way. We've been up against resistance for the last several days and have not been able to get the bulls above or the bears below and to be able to stick as of yet. In terms of the Dow futures, you see yesterday again another doji and a very similar candle this morning. NASDAQ futures, basically, I guess I'd go ahead and call that another doji. Look at all that action. So right there in the middle of the cloud too. So very, very choppy, neutral zone. Of course, recent action by the Russell has been more decidedly a reversal after poking its head up above the cloud, and it's basically failed back into the cloud, though something of a bit of a positive bounce so far today. We'll see if that actually gets anywhere. So let's take a look at these other markets, see if we got any kind of confirmation or direction as to where we might break. And I would say, perhaps leaning to the bottom side down here. So this might be closer to the bottom edge of the range than the others are to their top of their ranges. So VIX might be making you think that we are going to break up. But then when we come to look at bonds, not really terribly worried about things breaking up in the equity market. So very, very little response so far in bonds. Bonds definitely not giving you any kind of tell. And we haven't looked at gold in a couple of days. Let's go ahead and look at that. Look at the overnight high. Globex high was a 52-week high, but rejected. So still back in the range there after a little exploration visit in gold in the overnight. I think that's probably enough of those. Let's go to our daily report. We've been definitely a market in transition as evidenced here. You have your market intermediate term phase opinion at phase 4, which is a nice bullish pattern. Price patterns in your horizontal resistance, maybe throw in some bull flags and so forth. IBD status is that confirmed uptrend, so that certainly is bullish. Accumulation distribution, it's been improving, but the Nasdaq still a D plus, the S&P a C minus. I'd like to see that get much healthier if the bulls are really in control. GMI index is on a buy signal at a 4 out of 6, and its decision points scoreboard from stock charts is at a very much a transition phase with some signs starting to come into place on the intermediate trend with the bulls, but also the dominant signs across most of these are quite neutral to even bearish, and against a bearish backdrop on the long term. So very much a market in transition. Consensus here is just that, market in transition with probably a bullish bias. If we were to try to flip the coin, we would probably at this point say that a break up is slightly a bias, but certainly not a done deal as of yet. On the position sizing opinions, no change from yesterday, 100% and 75% on the two systems. Intermediate term market posture up over 90 on the S&P and the Dow, though the Nasdaq and the Russell have slipped below 90, but still all four still in a very strongly bullish posture against the backdrop of a weak bullish sentiment line. That weak bullish sentiment line is also reflected in the strength of the trend on the S&P, where we have a weak bull trend with improving conditions. In terms of hedge warning status, 0+, normal with some elevated risk conditions. In terms of special opinions, no change from yesterday. VIX is still borderline acceptable to initiate new positions for novice traders for the option income strategies. Consider reduced position size given the expected larger than normal delta and theta and more delta and vega moves that might occur with the larger than normal VIX. In terms of cover calls and put selling, conditions are acceptable to initiate new positions for novice traders. Also consider, though, the construction of your trade and perhaps be a bit more defensive. using in-the-money strikes and in a higher proportion than out-of-the-money strikes, using low beta holdings, and consider legging into positions through well out-of-the-money put selling. In terms of special warnings, relatively benign here. We still have our VIX futures up over 18. Our distribution day count on the NASDAQ did tick up one, but still not at warning status. Skew, I mentioned this earlier, up over 130. That's about a 10% probability of a 2 standard deviation move, so that certainly is a warning. And the current week out expected move on the SPX is up over 50, so that is something of a warning as well. New highs, new lows, that's a pleasant one for the bulls, up over 300 yesterday. Everything's risk on in terms of the key intermarket risk aversion indicators. Going to sentiment, pretty neutral. Gold, perhaps the only one that's a bit extreme. And then these industry groups, countries, sectors, and so forth are, sitting on very high sentiment readings. So you want to watch those if you're in any holdings there. Watch for potential reversal patterns that could show up. Fear and greed index pretty much locked down, about same score as the day before, 71, so nothing decided there as well. In terms of sector specific, we do have a very nice blend of intermediate term market postures that are bullish. And it's not just defensive, it's also a nice blend of higher beta. So this is actually probably a pretty good sign for the bulls at this point. In terms of sector specific market postures, short to intermediate term, into the long, into most of these sectors, with the exception of healthcare. Healthcare has been getting pounded over and over again. The biotechs just cannot get up off the mat. Notice the sectors that are still neutral on the long term. For the most part, they are the higher beta sectors. Percent change yesterday, materials, telecommunications, consumer discretionary, utilities, all positive to the highest degrees, but nothing really stands out as having a big day. Perhaps materials and telecom at about 0.5%. And I think that's probably enough for today. Let's see here. Well, let me just mention about YouTube. So with YouTube, remember that you can have a free subscription to this channel, and if you subscribe to the channel, you can be alerted to new content being published. Give the video a few minutes after that notice to be published in high def. If you go immediately to the link, you'll certainly see and hear, but the quality of the playback will be just a teeny bit fuzzy, and nice sharp playback in high definition certainly is nice to be able to view the charts. Click on the setting button and you'll also be able to speed up that speed. That you can control the speed of the playback, and most of the time I find that I listen myself to YouTube videos at about 1.5x, and that it's still quite understandable, and yet at the same time I can cut down the amount of time it takes to review some content. So that might be something to kind of keep in mind. And I will flip through the rest of these. Disclaimers, as always, hit the pause button if you need more time to review the disclaimers, and then you notice the hyperlink at the bottom for the full set of disclosures. We'll see you back here on Monday morning for the Falcon Global Market Preview. In the meantime, good trading.